Many real estate investors have worked hard and spent years growing their investment property wealth. Eventually, they wish to enjoy their achievements without the burden of being a landlord. Investment property wealth management involves transitioning from active landlord duties to passive wealth management. This also often means progressing from a growth strategy to an income strategy while seeking to reduce risk. Passive DST investments help manage risk in 4 key ways. 1. Dollars at risk. DSTs feature non-recourse debt and no future capital contributions. Equity at risk is limited to the initial investment only. 2. Asset quality. DSTs provide the ability to move from individually owned properties to assets of similar scale and quality as may be owned by pension funds or public REITs. 3. Management quality. DSTs allow investment alongside experienced institutional-grade operators with proven track records. And 4. Diversification. DSTs offer a wide selection of investment solutions with the ability to achieve meaningful diversification across property types, geography, investment strategy, and sponsor. Investment property wealth management is a holistic approach designed to meet investors' financial and personal objectives. In addition to potential financial and risk management benefits, DSTs may contribute to an investor's lifestyle objectives by providing passive, recurring cash flow potential without the burdens of being a landlord.